Hello guys. Because of the news that USA will attack Syria in this weekend, and we have seen some kind of news, it might be tomorrow it will be very volatile. Okay, the stock market can go down or can go up, all depends on the traders' reactions. But for those who are day traders who want to sell short stocks, I will just show you some techniques that you can use. And for those who have, for example, holding stocks like me, which is swing trading, I will give you just some recommendations if you want just to try them. Okay, so let's go to the explanation. Now, the first thing you can do is you can look at Dow Jones. Okay, now before 9:30. Okay, so this will give you AM. This will give you an indication if the Dow Jones, if it's going down in the morning before the open, it might be that it can continue after 9:30. Okay, now understand, some people, when they want to do like selling short, some they have some stocks listed in portfolio, like let's say 4 or 5 or 6 or 7 or 8 stocks, and some they just scan in the morning which stocks are going down according to the criteria they use in order to find these stocks. Let's say you find a stock. Most of the time it's after 9:30 a.m. Here is the thing. There are some traders, what they do this. It's a bit risky, but some people do it. So they sell short, okay, on the open. It's a risky thing. It means they don't know what will be the price, but they think the stock will be going down. That's why they want just to be from the first guys who buy at the open. That's why sometimes a stock at 9:30, okay, you find a very long red candlestick like this. Just in the first minute or 2 minutes, you find like this, and this is the reaction of these guys. Okay, these guys, these traders who sell short without looking at the price, they use this. Now, it means they don't know really what's the price, but in the morning they see that these stocks, Dow Jones index and other stocks, they are going down in the morning, and the news tells that the stock market is at bad news. Okay, and you see everything going down in the morning. That's why these people try to take action in the first minute, and you will see. Okay, so this is the open, and then you see that the stock has been going down. Now the thing is, what some people do without this thing, they will wait few minutes and try to see if the stock continues to go down like this. Okay, continues to go down. It could be this candlestick. It could be 1 minute. Okay, it could be 1 minute. It could be 2 minutes. It could be 5 minutes. Whatever time frame you are looking for to do your trade. Now, after this few minutes, if the stock continue, this is the open. Let's say the stock is $20, just an example, and now it is $19. It goes so bad in these few minutes. And then you just try to see if these candlesticks stop going down. And then if it's going up and continues to go up, it might be that the market will be better and it will be going long. Okay, so this is the first scenario that you can see when the stock market is going down in the first minutes. Then it can go up or it can continue going down. This you will see it after you wait 10 minutes, 20 minutes, 1 hour, 2 hours, and you will see where is the price is going. If you are shorting the stock and your stock is still going down and down and down and down, even if it has one green candlestick and then it continues to go down, it means that you are right and it will make new lows. Okay, each candlestick will make a new low here, new low, and the price will be going down. Understand that in these days, if the bad news is true and all the people are okay, the short sellers will be a lot. That's why the whole market you see is going down. Okay, now the second thing I want to mention is that so let's say this is the open, $20. Okay, now it opens like this and then you see a very green candlestick like this. Now if you see that just at the open you have a green candlestick, it might be 1 or 2. So this doesn't mean that the market will be going long for good. Okay, it can be just few minutes is going up because there are a lot of people who are contrarian. It means they think that the stock will go up although we have bad news, so they buy from the beginning. Okay, and then you will be looking at this candlesticks and then you will see a candlestick that confirms that the day is down. When the open here, this is the open, although the stock has been going up, but after a few minutes it's going down and it crosses the open. Now when it crosses the open, it might be that the day will be down. Okay, like this, it will be down and the stock will be going down. Okay, so the open is always very important in day trading. Whenever there is the open, okay, try to check the price. Is it going up or going down? Because the open will make the day. Okay, if it is like this, it's a good day. It's a good day for those people who go long. But if it is bad, so the open will clarify in this thing. And there are a lot of techniques that you can use in order to know how the day will be. But in most of the time, the open is very, very important. Now, sometimes you see this green candlestick and you say, okay, it's bad news. Why the people are buying long? Okay, some people, they are contrarian. It means they think that the news is not really bad news, but it could be good news that USA is hitting Syria or something like that. So it depends on the opinion of it means the opinion of the traders. This what makes the price move up or down. It's just an opinion. Okay, so but the opinion always the price gives you the right opinion. Okay, gives you always the right price. If it is going down and the stock was 20 and now is 18, don't think that the stock from 18 it can go to 22 just like that. Okay, because the news are so bad. Now another thing that I should mention about day trading, we have a lot of techniques, that you can use. Sometimes a stock, let's say the stock was good. Let's say here a stock was good. Now this is yesterday. Let's say the stock is yesterday is $20. It stops at $20 and it was a good because it's a green candlestick. So this is yesterday. What I mean by yesterday, it is Friday, okay? Because today is Sunday. Tomorrow is Monday. So this is Friday, 13 April. Okay? It was a good day for this stock. Now let's say the weekend, we have the bad news in the weekend. Okay? Bad news because there is a war or there is a strike on Syria. This is the bad news. Now, on 16 of April, 16 April, it means on Monday. Okay, on Monday. Let's say people in the morning before 9:30 they were shorting the stock. So this is $20. The new candlestick, it opens like this, and let's say it opens with 19. So this is the open here of today. Of let's say it is Monday, because today is Sunday. We are not in Monday yet. There should be, like, let's say a small gap down, because this is 20 on Friday and 19. Okay. Most of the time, this is by my experience, if there is it opens low, then Friday, if it will continue to go low, sometimes you have a green candlestick. Okay, because those people who shorted here, who shorted from 20 to 19, they want to cover back. They don't want to wait until the open, so they cover back. So that's why we see a green candlestick. Let's say the stock goes to 1935, just in the few minutes when they open. But later, after a few minutes, 10 minutes, 20 minutes, you see that the stock is going down and crosses the open. If it crosses the open, okay, going down, this means that the day could be good for short sellers, for the sellers. Okay. Now, so this is just another scenario that I showed you, because stocks, they don't have the same opening, the same price, the same thing. But at the end of the day, everything will be clear, because whenever the stock opens, if it still continues to go up, 1935, 1990, 20, maybe it will be going up. Okay, but in a few minutes, 10 minutes, 15 minutes, or 20 minutes, it will be going down, and it doesn't succeed to go up. This means that the day will be very, very bad, and the short sellers will win. Because always think that day trading is just a competition between traders, but the majority will win. So you should be with the majority of traders' action. Okay, if it is long action, it means going up, or it is going down, like shorting. Okay, so this is just a few information about day trading techniques, and there are a lot of day techniques. If you were interested, you can see training level 12 and number 11. Okay, 11 for selling short and 12 for day trading. There are a lot of techniques that I propose. Okay, so right now let's go to see what we call the swing trading. Now let's say you have stocks here, mini stocks. As I told you today, stop loss is the number one that you should think about in your stocks. If they have stop loss and this stop loss is appropriate, even if tomorrow you exit 1 or 2 or 3 because of the bad day and it is a troubled day, it's okay. Okay, So this is a normal thing. You can't control your stocks more than that, because the only thing that you can expect is to exit. Because here is the thing. Let's say you have a stock $20 and your stop loss is $9.50. Stop loss $9.50. Now let's say tomorrow, just an example, okay, it's a bad day. Understand that the people, when they take 20 and they begin to short, understand that it may not be just 50 cents that you lose. It might be they go to, let's say, to $17 or 16 or 15 or 18. Whatever is the price, more than your stop loss is a bad thing for you, because if you don't put stop loss and there is a bad day like this, you will be hit and you will lose a lot of money into your account. So these are for swing traders. So hope you take always the advice, my opinion into consideration, and it's up to you. If you don't want to put stop loss, if you want to leave the stocks like they are, it's up to you. It means, for me, I'm just trying to help you understand how things works in the market, and you will see what I say in the future. You will see it as I told you. Okay, even if you let's say if you exit 1 or 2 or 3 trades, let's say you exit them, okay, you just wait 2 days or 3 days. If these stocks come back again because the news have gone, it's okay to buy them again. There is no problem with that. Okay, it's better than to leave a stock of 20 going to 17, and then if you want to stay with it, it could be 1 week, 1 month, 2 months, 6 months, and maybe it will never go up again. So this put into your consideration as a probability in trading. It will happen. It had happened. It is happening, and it will happen in the market, because the market, things that I'm explaining, happen always. It happens always for many stocks in the stock market daily. Okay, it happens always. So I hope this video gives you some techniques and just an opinion how things will work tomorrow. Okay, there is no, it doesn't mean that tomorrow if the stock market will be going down, it doesn't mean that from the beginning it begin down and down and down and you will be making money easily. Understand that sometimes the market will be going up. You think that the market is going good, you go long, and then after a few minutes it go down and it will be bad, or it will be bad a few minutes and then it will go up. Sometimes there are many directions in the same day. So if you are a day trader, you should be taking quick actions. Don't stay too long with whenever you see that you are in a position, in a losing position, don't stay too much waiting. As you know, if you are a day trader, you know this. You shouldn't stay with the loser a long time. You can exit, and then if you see something good, you can buy again. Okay? If it is confirmed that it is a bad day and the market is going down, you short the stocks. Whenever you short the stocks, you should put your stop loss and follow, and don't leave the stock until you want to exit the trade, because you think that the stock market is going down. It go down, yes, for 1 hour, then you say it's okay, it will be going down. At 3 o'clock I will come and open my account and just cover my short, that's it. But you will never know. You will never know. You go there or there and the stock market will go up again, and then you lose a lot of money. So if you are a day trader, you should watch your trade all the time. Half an hour, 1 hour, 2 hours, you make some money. That's good for you. Okay. If you lose, if you are wrong in the direction, you lose a little. This is part of the game. So don't be scared to trade. Okay. Don't be scared. The market is just if you want to enter, you enter. If you want just to watch, you watch. If you want just to try, you try. Okay? But keep in mind that you should be disciplined. When you enter, you will know when to exit if things comes bad. You will know this before you enter. This is in terms of risk that I am telling you. Okay, but if the market is with you, it means you go along with the market and you are making money. You should stay more and more and more. Sometimes some stocks, they go up $5, $10 in one day. Sometimes they go down $5, $10, $15 a day. Okay, small stocks or big stocks. So always try to take the opportunity. Believe me, tomorrow is Monday. We will never know what will happen, and if this is it bad news or good news for the market. We will see, and then you can take judgment. Okay, thank you very much for watching, and see you tomorrow.